Hi friends, welcome to Konexio Technical Insight. I'm Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now first of all, a general disclaimer. This video is only for education purpose. Please consult your financial advisor before investing and trading. So friends, let us discuss what we have mentioned in our last video. In our last video, we have an important event, the result of general election. So we had a view that market might trade volatile because of this major event, but the larger degree trend was positive. So any dips was a buying opportunity, but volatility was expected on the back of the big event. So market opened on a positive note, then it rallied sharply uh, on the day of the result, again, market started correcting and corrected sharply. And from the next day itself, it again slowly and gradually again started inching higher, and it ended just below its lifetime high, which is clearly indicating that still the undertone of the market is bullish. But last week we saw a swing of almost more than maybe 2000 or 23 to 2500 points on in the last couple of trading sessions. So looking at this particular high volatility, let us go to the daily charts and we'll try to figure out what could be the trend for the next week. So friends, now let us go to the Nifty daily charts and we'll try to analyze or study what could be the trend. Now this is the Nifty daily charts, and you can clearly see that almost it made a high initially of 23,365. Then on the day of election result, it made a low of 21,281, and again in 3 days it recovered almost the lost ground. So almost we saw the rally the swings of more than more than 2500 or 3000 points, or almost something near 3500 to 400 points, 4000 points. So definitely this was a very high volatile trading week last week. This is the daily charts. Now let me take you to the Nifty weekly charts. This is the weekly charts. You can clearly see it has formed a very long legged doji. This is actually a bullish sign, but most probably looking at this particular lower shadow, which is very long, we feel that before inching higher, markets might open on a positive note, then consolidate or correct little bit, and again start inching higher. RSI is also positive. You can clearly see it is in the comfortable zone. Daily candle is also very strong bullish. Weekly candle, as I said, it is a long-legged doji. So again, it is a bullish. But for a follow-up buying strength, we need Nifty to close about 23,340 in the Nifty spot levels. So looking at this particular pattern, we feel that we might open on a positive note or a flat note. We might see some sort of correction or profit booking of this last 3 days of sharp rally. Then again, Nifty might start inching higher slowly and gradually. So again, next week could be highly volatile. Uh, Looking at the current weekly pattern of the Nifty. So friends, let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 22,910. Below that, the second support is placed around 22,786, and third support is placed around 22,642. Whereas on the upside, the first resistance is around 23,338, which is the all-time high. If it closes above those levels, then next resistance is around 23,515, and third resistance is around 23,660. These are the crucial supports and resistance level in Nifty for the next week. And again, as I said, we might see some sort of correction or profit booking, but that could be used as a buying opportunity, and traders should try to follow this particular levels and trade accordingly in the direction of the trend. Now, friends, let us discuss the derivative data of Nifty calls. In Nifty calls, the action was seen in 23,500 calls, then 23,600 calls, 23,700 calls. Now here you can see there has been a the option premiums are positive. There has been a rise in the volumes, rise in the open interest. Impact volatility is slightly higher. It is between 15.51 and 16.02. Uh, on immediate basis or from these levels, 23,500 could act as a very strong support, very strong resistance area. If that is taken out and if Nifty closes above those levels, then there are chances then we might see an extension of rally. Otherwise, Nifty might rally from this level, take some profit booking around 23,500 and witness some sort of profit booking uh, around those levels. So one need to be cautious while going long in the Nifty, at least particularly at these levels, because a profit booking cannot be ruled out. So friends, now let us discuss the Nifty put data. In Nifty put, the action was seen in 23,200 puts, then 23,000 puts, and 22,800 puts. Now here you can see there has been a significant drop in option premium, which is bullish in nature, because smart money is already into writing the puts, which is the sign of which is the nature of the this particular data, which is bullish. Implied volatility is very high. It is between 17.94 and 20. Higher the implied volatility, and already you can see that this particular drop in the option premium, which might bring in some sort of profit booking in Nifty put those who have shorted the Nifty puts. So a gap up opening cannot be ruled out, but a profit booking at higher levels could be seen. Now, on immediate basis, 23,200 could act as a very strong support area. If that is taken out, I mean to say, if that is broken, and if Nifty manages to close below 23,200, then there are chances that Nifty might drift down to or slip down to the levels of 23,000, then 22,800 mark, and between 23,000 and 22,800, that could be the area where one can go long or start building long positions. So as I said, the data uh, is slightly positive at this juncture, but the IVs of Nifty put are slightly higher. A gap up opening cannot be ruled out, but profit booking can be seen at the higher level. So one should not go long from these levels, should wait for some correction before going or before building some long positions in Nifty. Now, friends, let us discuss the Bank Nifty daily charts. So let me take you to the Bank Nifty daily charts. In Bank Nifty daily charts, also you can clearly see that it has been moving in this particular rising channel, which we have been discussing since last couple of months. Again, it has not tested its lifetime high, which was marked on uh, 3rd June. Bank Nifty also corrected sharply, and again it has recovered almost 70% of the lost ground in the last three trading sessions. Uh, this is the daily charts. The candle is bullish. Let us see to the weekly charts. Weekly charts is something like a hammer pattern with a very long shadow, which is again overall bullish in nature, but for that Nifty needs to cross and close above 51,133 mark, which is the lifetime high, which is far away, slightly far away from these levels. But uh, at these levels, the prices are slightly overstretched. A profit booking after a gap of opening cannot be ruled out. Here you can clearly see RSI is also positive from the comfortable zone. So definitely looking at the charts, the day, technically it seems to be positive, but looking at to the last 3 day swing, a weakness or profit booking could be seen at the higher levels. So now friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed around 49,390. Below that, the second support is placed around 49,089. Third support in Bank Nifty is placed around 48,520. On the upside, the first resistance is around 50,092. Above that, the second resistance is around 50,667, and third resistance is placed around 50,979. These are the crucial supports and resistance level in Bank Nifty. Traders should Follow these levels closely, monitor it closely. Use 45 minutes or 30 minutes breakout strategy. So traders should mark half an hour or 45 minutes, whatever, whichever strategy is comfortable to you. Mark highs and lows of this particular time range, and trade accordingly in the direction of the breakout. Say for example, if it breaks highs of 30-day or 45 minutes range, 30 minutes or 45 minutes range, then one should go long. If it breaks the lows of 30 minutes or 45 minutes range low, then one should go short. This should be the strategy used, because last week we have seen highly volatile trading sessions, and this volatility could be carried forward in the coming week also. So friends, now let us discuss the derivative data of Bank Nifty calls. In Bank Nifty calls, you can clearly see the action was seen in 50,000 calls, 50,500 calls, and 51,000 calls. Here the option premiums are positive. The IVs are very high. It is between 20.03 and 21.70. There has been rise in the volumes, rise in the open interest. In some strike prices, specifically 50,400, there has been a shedding in the open interest also. The option premium was slightly positive to flat, but the implied volatility is very high. So as I said, this is slightly bullish, but the implied volatility is very high. So if there is a gap of opening in Bank Nifty on Monday, then I see, or I believe, that the option writers, will start coming in and start writing at the money or out of the money Bank Nifty calls, which might bring in selling pressure from the higher levels. So one needs to be cautious, avoid going long. Those who are long in last couple of trading sessions should try to book profits at the gap up opening. If there is a gap up opening on Monday, or even if it opens flat to positive, one should try to book profits at the higher levels. Now friends, let us discuss the importance of the Nifty puts, or the derivative data of the Nifty puts. The action was seen in 49,500 puts, then 49,000 puts, then 48,500 puts. Now here there has been a significant drop in option premium, which means the smart money is actively writing the puts, which is bullish in nature. But here also the implied volatility is very high. It is between 21.48 and 22.45. There has been a rise in the volumes, rise in the open interest. So on immediate basis, 49,500 could act as an immediate support area. If that is broken, and if Bank Nifty breaches and closes below those levels, 49,500, then there are chances then Bank Nifty can slip down to the levels of 49,000. And if it closes those levels, also below those levels, then there are chances that it can go down to 48,500. So most probably, looking at to the volatility, I believe that traders should look out for the range of 48,700 to 48,500 to start building long positions from those levels. If there is a correction in Bank Nifty, if there is a correction to the tune of this intensity in the Bank Nifty, so one should watch out for the particular level to be tested on a 48,700 to 48,500, and again one should try to build long position at those levels. So, friends, now let us go to the final segment of our show, which is positional call. I have identified one stock, which is the heavyweight of index. Uh, the name of the stock is Reliance Industries. Let me take you to the daily charts of the Reliance Industries. The stock has formed a flag pattern formation. The stock is yet to give a breakout. You can clearly see this is a flag formation in Reliance Industry. Stock is on a verge of a breakout. Breakout is little far from this particular level, but it is in the midway of this flag formation. RSI is positive. You can clearly see from the comfortable zone. Volumes are also rising in the last couple of trading sessions. So technically, looking at the price volume action, the stock has potential to give a decent return in long run. Uh, uh, so long-term investors, positional traders, swing traders, short-term investors can accumulate the stock on dips to 2,890. for an upside target of 3200 in long term. So definitely the stock has potential to give a decent return in the long run. Now again, just fundamental triggers which are positive in nature. Street is expecting the rise in the ARPUs in telecom sector, which would be beneficial to Reliance Industries. Reliance Industries has also tied up with the with Russia to purchase crude oil for long-term basis. This is also a positive sign for the stock in the long run. Now, technically, the stock has formed a flag formation. It is on a verge of a breakout. The volumes are also rising. So, if we combine both technical plus fundamental triggers, the stock is looking very promising for long-term investors. So, again, I would like to recall the levels. Investors should buy the stock on dips to. I mean to say, investors should buy Reliance Industry on dips to 2890 for an upside target of 3200 for long term. So, friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.